here, founder and owner of A&A Capital. So what I'm going to do today is a trade recap of our trade of the week, which was GBP AUD. Just before I start, I'd like to go over our website. So you can go onto our website at aacapitalltd.com and sign up for the services that we offer if you're interested and like our high risk rewards and accurate trades. You can also contact us via WhatsApp. You can follow our Instagram. You can contact us through our company contact form. And if you would like to get started under us, where we send in daily analysis and updates on all our trades, you can just simply fill out our registration form, agree to the terms and conditions, and then we will contact you within 24 hours. Okay, so let's get started to the video. Right, so I sent this analysis in the weekly market breakdown, which was released last Sunday. If you want to go and have a look before this trade actually happened, so I explained all the in-depth analysis of it. So let's go over it again in terms of how this trade was executed. So what we can see here is we've been quite bearish on GBP AUD. So then what do? We form a correction. After we finish our impulse wave of wave 1, 2, wave 1, wave 2, wave 3, wave 4, and wave 5, we get our impulse wave, right? So wave 1. Then comes a correction. Then comes wave 3. Now the rule of Elliott wave theory, there's three rules. Okay? Those 3 rules include wave 2 can never pass wave 1, the origin of wave 1. Wave 4 can never come into contact with wave 1. And then wave 3 can never be the shortest wave. Okay, once your analysis agrees with these rules, then you know that your analysis has a high probability of being correct. So, so after we've completed the impulse wave, we then formed a correction, a very large correction. If you can see, we never impulsed again. So what do we see? We see wave A, and wave A consists of 3 subwaves. So we have wave A, B, C, the 3 subwaves of wave A. Then we have wave B, which also is always going to be 3 waves. So wave A completed, wave B, and then wave C is always a 5-wave structure. Okay, so wave 1, wave 2, wave 3, wave 4, and wave 5 was all impulse, right? So that was the C wave of a larger correction wave. How do I know that was a larger correction wave? Well, because our whole impulse was quite large and we didn't even reach, let's see, our impulse completed here. So we didn't even reach any key level yet. Wave 5 was never reached. Okay, sorry, not wave 5, Fibonacci point 5 was never reached. So as a result, I know that the correction wave has still not completed. What we can also see here is we can also see a bunch of imbalances, right? So this would have been an imbalance on the 4-hour. Let's see, what else can we find? We can see equal highs forming over here that were never taken out. Okay, so I know that my correction is not completed yet. So what do I see? I see my wave A complete, then wave B complete over here, and then we were in the middle of the C wave, right? So wave 1, wave 2, wave 3, wave 4, and wave 5 form the C wave because C wave is always an impulse wave. Wave A can either be a 3-wave or a 5-wave structure. Wave B can be a triangle or a 3-wave structure, and then wave C is always going to be a 5-wave structure. There's no doubt about it. And then the third wave always consists of subwaves, so we also have a wave 1, wave 2, wave 3, wave 4, wave 5 within our 3-wave structure. Okay, so yeah, what did we see over here? Okay, we saw a lot of liquidity being built up. Okay, I explained all this in the weekly market breakdown, which was posted last Sunday before this trade actually happens. Now, this is the beauty of us. We post trades before they happen and then recap. Others, what they do is they post after a trade happens. So, I guess that just speaks for itself. Okay, so we have our equal highs formed. What are equal highs? Equal highs are an indication of liquidity being built up. So what are retail traders going to do? The traditional retail traders, simple. What they see is a double top, they sell, yeah? It comes back into that region, they see resistance, okay, let me sell. 1 sec. So what did we see over here? we saw this move down was encouraged by retail traders. Then institutions pushed price up. Institutions pushed price up to catch out all those retail traders' stop losses. What retail traders also do is they have buy stops resting above this, above their resistance, in case it's broken and it turns into a support, which it never does. Okay, so that was hunted. So the sellers' stop losses got hunted. Their buy stops got triggered. Those buy orders got stopped out. Okay, and then what happens is a buyer stopped out is essentially a seller. So what did we do? We had a break in market structure, a return to origin, and then a push down. Now we didn't catch that move, but because it was on a Friday, I think. So we tried to get in early Monday, and we posted this analysis. And yeah, so we had a break in market structure, return to origin to trigger the unfilled orders by institutions and break even from their manipulation, and then we fall, then we collapse. Okay, now let's see. So we saw wave 1, 2, 3, 4, 5, complete wave 1. Then we saw a wave A, a B, and then a C wave, which completed our second wave, right? Our second wave can never exceed wave 1, the origin of wave 1. So yep, that rule's filled. So what can I expect? I can expect bearish pressure. Okay, and what did we see immediately? We saw bearish pressure. When institutions broke even from their manipulation and triggered the unfilled orders, bam, we collapse. And then what would retail traders be doing here? Okay, retail traders see a double top form, resistance, they're selling, selling, selling. This move was by retail traders, and then bang, institutions stop them out, trigger us, because we know when the real move will start. It triggers us in the unfilled orders, and then we ride the move down after all these retail traders get stopped out. Okay, so our order was triggered on the 1 minute, because this fills our entry criteria. So whenever we want to get in on an order, we always get triggered, and we look for entries on the 1 minute time frame. So we saw our entry criteria filled, and we would have taken this trade. However, last week was the US presidential elections and all that. So as a result, we did not, because we knew volatility was going to be crazy. However, we still posted this analysis if any of you guys wanted to take it, and I know a few people in our discussion page took it. So yeah, so the lesson from this trade was never trade retail, always trade with institutions. Okay, and you can learn institutional theory and Elliott wave theory by signing up to our course if you wish. So yeah, hope this benefited you guys, and feel free to join our public Telegram channel and our discussion page to discuss with top traders from around the world, and feel free to post your breakdown in there too. So hope this helped. Best of luck to you guys.